Hello and very warm welcome to the channel of Victory IAS. As you are aware that we are doing 2 years current affair rapid revision series for prelims 2026. So let's discuss some current affair updation related to the subject of economy. Computerization scheme for the office of RCS and ARDBS. RCS mainly related to registrar of this cooperative societies, and this ARDBS is related to this agriculture and rural development banks in various states. So as we have already discussed some banking sectors related to cooperative banks, etc. So that is related to the supervision and maybe the kind of regulatory authorities that are there for cooperatives, right? Registrar. Union Home Ministry and Minister of Cooperation launched a computerization scheme for the offices of registrar and this agriculture and rural development banks in various states. The initiative part of Sahkar Se Samriddhi, that is prosperity through cooperation, right? Sahkar Se Samriddhi, we have seen this scheme in previous classes also. Vision aims to digitize the entire cooperative sector including primary agriculture credit societies, that is in rural areas, registrar of cooperative society offices and agriculture and rural development banks. The computerization project is expected to enhance transparency, accountability and operational efficiency in the cooperative sector, facilitating medium and long term loans for farmers involved in modern farming practices, right? Now that is related to digitization scheme of registrars, right? Now plastic credit bonds, the World Bank and Citi have collaborated to launch 100 million US dollar bond aimed at addressing plastic waste. So for example, the disposal mechanism, now we have seen some shocking updates also that we will study under the subject of environment also, that the plastic the traces of plastics have been found in the milk of mother breastfeeding mothers, right? So those plastics traces have been found there also. The plastic is the safe disposal mechanism, etc., is still a challenge now. We have already seen that the safe disposal mechanism and the kind of products that are being made of plastic, how they are becoming part of entire human life cycle, part of food chain also at some places. So that is need to be cater, and that is why a bond for this to aim at addressing plastic waste. A bond is, what is bond? We have already seen financial instrument representing loan made by investor or borrower. Typically a government or corporation can be there. In return the borrower agrees to pay periodic interest and return the principal amount at maturity, face value and the bond yield, etc., that we have seen in the last class. Plastic credit bond is designed to combat waste and finance plastic collection and recycling projects in Ghana and Indonesia. Repayments are influenced by sale of plastics and carbon offset credits. Carbon offset credit means when this carbon emission and other greenhouse gases emission are also there. This investors receive their principal back at the end of the 7-year term guaranteed by the World Bank with a minimum interest payment of 1.75%. You have to only remember plastic credit bond released by World Bank. That's it. This initiative signals further growth in the nascent carbon credit market. The plastic bond follows previous outcome bonds, including rhino bond and wildlife conservation in Africa, and emission reduction linked bond for a water purification project in Vietnam. Now, venture debt financing, also related to this entire share market, capital market, etc. In 2023, Indian startup experienced a significant surge in venture debt financing, raising a total of over $1 billion, marking a notable 50% increase from the previous year. That is why we are saying the volume in capital market has increased to a great extent. Venture debt is a financing option commonly utilized by early stage startups that have yet to establish a consistent revenue stream. So for startups which do not have consistent revenue stream, the venture debt is there. Unlike traditional debt financing, venture debt is offered by specialized lenders who are willing to assume greater risk in exchange for the possibility of higher returns, because when it is at initial stages, you don't know the kind of return that you can get from it, so risk is at higher side. This type of financing allows startup to access additional capital without diluting ownership, right? Ownership is not diluted, so startup in these startups to this ownership is not getting diluted, providing them with the financial resources needed to the fuel growth and development. This shift towards venture debt financing in India is in contrast with the decline observed in the US, showcasing India's burgeoning confidence and strategic adoption of alternative fund mechanism, right? So venture debt and venture capital, the difference, but we can move to the next topic. Uniform KYC mechanism. KYC is there to get the idea of the customer that is there, right? Constantly it get updated also to eliminate the customers which are not doing businesses. For example, when we talk about banks, right? So the customers who have died but not reported, so those kind of things get come into light when we revise the KYC norms. A committee led by Finance Secretary TV Somanathan has been tasked with suggesting ways to enforce a uniform Know Your Customer mechanism. The committee, comprising members from various ministries and regulators, was formed after the Finance Stability and Development Council, that is FSDC, decided to simplify and digitize the KYC process in the financial sector. This initiative is deemed crucial, especially in the light of ongoing Paytm payment bank crisis. We have already seen RBI has stopped this core banking or core payment mechanisms at Paytm payment banks, which revealed non-compliance with KYC norm. KYC means know your customer and sometimes know your client. Know your customer or know your client check is the mandatory process of identifying and verifying the client's identity when opening an account and periodically over time. It's not like one time you have furnish all the details, and periodically also sometimes the data is required. In other words, bank must ensure that their clients are genuinely who they claim to be. Now, payment aggregators, we have seen several startups including Decentro, JustPay, Zoho have recently obtained regulatory approval from the RBI to operate as a payment aggregator. Right, this is what the payment aggregator works look like. This is payers bank, and this is payer or customer. So how they are involved in entire transaction process. Other notable companies that received license earlier including Zomato, Stripe and Tata Pay also. Payment aggregator is the service provider. We have already seen who is payment aggregator, so let's not go into the details of it. Now, investor information and analytics platform. The Union Ministry or State of Electronics and IT, that is MeitY, Skill Development and Entrepreneurship and Jal Shakti launched the Investor Information and Analytics platform developed by IIT Madras. This platform serves as a comprehensive resource for startups, providing access to venture capitalists, like just now we have seen venture capital who invest as venture capital, investor networks, government scheme and various components of the startup landscape. Features of this platform, right? Investor information and analytics platform developed by researchers at the Center of Research on Startups and Risk Finance, that is CREST of IIT Madras. The platform aims to aid startup founders, entrepreneurs and young Indians building innovative devices, services and platforms. See, basically it is to reduce search cost. Basically it is to mobilize a resource or help in resource mobilization, right? When everything is available at one platform, so it reduces the search cost. You don't have to look here and there for all the details, and also it facilitates, or it also contributes in ease of doing business or provide motivation to the startups. It includes features like startup GPT, an AI based conversational platform for easy information access. The platform contains information of over 200,000 startups, nearly 11,000 angel investor first time which believes in investing in startups, right? 5,000 venture capitalists and 1,000 incubators, over 100 government agencies funding startups and 550 banks supporting startups. Now, internationalization of UPI, another important topic. UPI services in Sri Lanka and Mauritius. The Prime Minister virtually inaugurated the launch of UPI services in Sri Lanka and Mauritius along with RuPay card services in Mauritius. UPI or Uniform Payment Interface is a real-time payment system in India, allows users to transfer money between bank accounts using mobile device. UPI is regulated by the Reserve Bank of India and was developed in 2016 by National Payment Corporation of India. Two times this question has been asked in UPSC prelims. UPI allow users to transfer money instantly for free using unique UPI ID or virtual payment address, that is VPA. When you put UPI ID or at the rate, right, that those kind of things. So VPA. Users can also make merchant payments, route funds, and access multiple bank account in a single mobile app. This is related to UPI. Now some more details related to UPI. India formally launched the UPI at the iconic Eiffel Tower in Paris, France during the Republic Day reception. It is a significant step towards taking UPI global and fostering stronger ties. UPI, we have already seen this detail merge. This is what we have already seen. Now, National Electronic Fund Transfer, NEFT, one method of transferring payment. So recently UPSC has asked question on this RTGS and NEFT. The kind of comparison was there. So majorly question related to RTGS was there. Recently, the National Electronic Fund Transfer, that is NEFT system, processed a record of 4.10 crore transactions, making the highest number of transactions processed in single day. The NEFT system, along with real-time gross settlement RTGS system, is managed by the Reserve Bank of India. So who is managing NEFT and RTGS? Reserve Bank of India, for settling retail and wholesale payments respectively. So this was the question when it was asked in UPSC, that it is for retail or wholesale. So what we can understand, NEFT is for retail and RTGS is for wholesale payment respectively. Both NEFT and RTGS have been operating on 24/7 365 basis, right? Means no holidays, etc. But this classification you can remember because it the question has already been asked, so we don't expect similar question, but some important information. Minimum transfer value in NEFT 1 rupee, in RTGS minimum 2 lakh. Yes, this was the question in how much denomination, that was the question asked in UPSC. IMPS minimum 1 rupee. Paytm, payment options online and offline both. So online and offline both, and IMPS is only online. Immediate mobile payment system it is. Maximum transfer value, there is no limit on NEFT and RTGS. This was also the question. So this particular chart was having the question could be solved from this particular chart only. This 2 lakh rupees, yes, maximum 2 lakh rupees with respect to IMPS. Settlement type is half hourly basis, so how much time is needed? It is real time, right? So this was also the one of the statements. So there were 3 statements in that, 3 or 4 statement in that question. Inward transaction charges, no charges decided by individual member banks. For example, banks like Axis Bank, etc., they are charging for IMPS. Other banks are not charging for IMPS, right? Interoperable payment system, the Reserve Bank of India payment settlement mechanism it is. RBI plans to launch an interoperable payment system for internet banking in 2024. This system expected to be launched in current calendar year, that is in 2024, aims to expedite fund settlement for merchants and enhance online transaction. Whatever transaction is taking place, that has to be settled also at the end of the day, right? This clearing housing facility that happens under the supervision of RBI. The interoperable system will be implemented by NPCI Bharat Bill Pay Limited, NBBL, and a subsidiary of National Payment Corporation of India. That this can also be one of the question, one question or one statement in the exam following RBI approval. It will enable customers to make net banking payments to business regardless of whether the bank and the merchant payment aggregators are integrated or not. So that to support a payment settlement only. Currently, online merchant transactions rely on non-interoperable payment aggregators requiring separate integration with each aggregator, leading to delays and settlement risk also. Interoperability is the basic ability of multiple digital system, applications and databases to connect and communicate with each other. Payment platforms leverage financial technology to connect and share data among ecosystem partners like banks, payment gateways, payment process merchants and consumers. So it is related to developing that kind of platform, right? Now, SEBI proposed framework for undervalued companies, the values which are undervalued, which are not showing their original value, that is undervalued. SEBI has proposed a framework for price discovery of shares of listed investment companies and investment holding companies whose market price is trading at a significant discount to their book value. So, proposed special call action mechanism, that is SEBI has suggested a special call auction mechanism without price bands for listed listed investment companies and IHCs whose shares are trading at substantial discount to their book value. Now the regulator has proposed that the stock exchange coordinate among themselves to provide this mechanism once a year for eligible companies. SEBI proposed that a special call action for listed investment, that is ICs and investment holding companies whose shares trade at significant discount to book value, they will be included under this. Key point is special annual call action without price bands aim to improve liquidity and fair price discovery, because they are trading at their low value despite the fact that the book value is high. Eligibility over 50% assets in other listed firms, 6 months VWAP less than 50% of book value. Then auction considered successful if 5 plus unique buyers participate. 28 out of 70 ICs or ICs potentially eligible under proposed criteria. Now what is the rationale behind this proposal? That some market observers believe that the significant difference between the market price and book value of these companies negatively impact liquidity, fair price discovery and investor interest, right? This is thing we can understand, right? Not more than that is required. So this we can skip. India surpasses Hong Kong as fourth biggest stock market. We have already seen this. Cross 400 trillion milestone. We have seen this. Driving force. These things we have already seen. Ongoing momentum. So fine. This we have already understood. Now, Trade Connect e-platform. Union Commerce Minister Piyush Goyal announced the upcoming Trade Connect e-platform to boost MSME and startup participation in exports. It was announced at the second meeting of the reconstituted Board for Trade. The portal aims to promote exports by small and medium traders, will be operational in 3-4 months. So they are supporting MSME exporter. We have already seen MSME classification that has been revised in the recent budget. So depending upon the turnover and the investment that they are making, the platform will connect Indian exporters and entrepreneurs to international trade stakeholders. This will help in exports, help exporters, especially MSME with limited knowledge, access key exports. So one thing you can also remember that there is Exim Bank also, Exim Bank, Export Import Bank, to support export and import. Export resources in one platform. The portal designed as one-stop resource for everything related to exports, including contact details of official and domain experts. It will bring transparency by making previously inaccessible material open for small businesses. Also, you can understand this Exim Bank is not only talking about export and import, rather they are also supporting for this shipping industries and all. So they are also helping in logistics as well. Packaging, etc., packaging, grading, etc., are also included there. Board of Trade, which advises on trade policy, was created in September 22. So sometimes this trade board, etc., sometimes they are also part of the question. We have already seen in UPSC that tea board, coffee board, turmeric board, etc., the question have already been asked. So Board of Trade, which advises on trade policy, created in September 2022 by merging Council of Trade Development and Promotion into it. It provides the opportunity to undertake regular consultation and discussion with the industry and trade. It also advises the government on policy matters associated with the foreign trade policy to boost India's trade. Now, exports target. If we talk about export target, the board discuss India $2 trillion export target by 2030. New foreign trade policy priorities and strategies to take export growth forward. Export Promotion Council, EEPC, India suggested connectivity to waterways and ports plus incentivizes to boost exports. Now, if we talk about trade deficit, that means we are exporting less. When export is less than import, that is less than import, then it is known as what? Trade deficit. And when export, this is known as trade deficit. And when you are exporting more, you are earning more, you are importing less, that means you are spending less, that is known as trade surplus. So this is trade deficit when you are exporting less. Export is less than import. When export is more than import, it is known as what? Export surplus, right? So narrowing India's trade deficit, that is India's December trade deficit narrowed almost 4% over November as exports rose while imports moderated. Services exports are also exceeding imports. So services also, we are having surplus in services, but we are having great deficit in merchandise or goods. Measures taken: logistic development efficiency. one thing we need to understand that logistic is very important part of export, right? For manufacturing also, logistic is very important part. You have to transport raw materials, you have to transport finished good to the market. So transportation or logistics is very important part, and we have lot of deficiencies in logistics as well, right? Reforming logistics sector by introduction of e-way bill under GST, that is also a great step, but we have to work on infrastructure, we have to work on digitizing the entire this value chain, it's entire this documentation process, etc. That will help us to a great extent. So efficient logistics connectivity via ports, waterways, that is multimodal. Here you can talk about PM Gati Shakti if you are writing answers in mains, etc., or if you want to connect the dots, PM Gati Shakti, that is multimodal connectivity can be there. Ports, waterways, airports, along with seamless last mile delivery are enabling business to access global market faster. Upgrading logistic and transport infrastructure across states can give Indian exports competitive edge. Lowering export cost. Lowering export cost, for example, there are some this raw material also we import from outside, so if we can if we can lower the custom duty on that, that can also help us to a great extent. For example, this electronic markets, electronic industry, semiconductor industry, so we are importing also many a thing like chips also we import a lot, so lowering the cost also will help on that. The new foreign trade policy resultant measures are lowering export cost through incentives like tax and duty remission and input tax credit. Input tax credit part of GST. One of the feature of GST, input tax credit, which makes India's export price competitive worldwide. Increasing export base. Now, when we talk about diversifying our export market, there are two things that we need to understand when we talk about increasing base. One thing is we have to diversify the number of products that we are exporting. Second thing is we have to diversify the export destinations that are there, right? We have a lot of potential in Middle East, we have a lot of potential in the Southeast Asian nations also, so we have to tackle those markets that are there. So platform like Trade Connect that provide export knowledge access along with guidance to small enterprises can grow India's export base potentially. Onboarding more MSME onto global e-marketplace through such channels will be the key factor here, right? Now, as SEBI Index provides provider regulation 2024 index provider, we have seen this these kind of updates. The Securities and Exchange Board of India mandates the registration of index provider managing significant indices based on Indian securities to enhance transparency in financial benchmark governance, right? What is index? We have already seen this. Common example of indices includes Sensex, Nifty. We have already seen this particular update, right? Now, REC Limited secures Japanese green loan. So when we talk about REC, endless energy, infinite possibilities related to renewable energy and all. So let's talk about REC Limited, a Maharatna central public sector enterprise. What we understand by Maharatna? That means it is earning good profit, decent profit, right? And over a sustained period of time, REC and this leading non-banking financial company under the Ministry of Power, Government of India, right? A leading non-banking, that is under Government of India, has successfully availed a green loan of Japanese yen of 60 billion, approximately 3,200 crore rupees, to finance eligible green projects in India. That is to contribute in clean, affordable, modern source of energy as well as sustainable development. Green loan facility detail, if we want to understand the green loan facility, benefits from 80% guarantee by SAYS under their initiative push strategy program. It makes SAYS first JPY dominated loan transact and first green loan in India. The loan saw participation from bank across Asia, US, Europe, including Credit Agricole, CIB, Bank of America, Citibank, etc. Bank and this mandated lead arrangers, right? Now, Credit Agricole role is acting as the ECA coordinator, green loan coordinator, documentation bank and facilitation bank and facilitation agent. Significance: the loan aligns with REC's green finance framework and commitment to foster sustainable growth. It will support projects meeting rigorous environmental standards, promoting renewable energy and reducing carbon emission in India. The transaction sets a benchmark for similar green financing deals in the Indian public sector. It enhances Indo-Italian business relationship in green energy financing. REC Limited, formerly Rural Electrification Corporation Limited, was established in 1969. It is a Maharatna that you have to remember. It finances and promotes rural electrification project across India. REC provides financial assistance to state electricity boards, state government, central state power utilities, independent power producer, rural electric cooperatives, and private sector utilities. The company went public in 2008 and is listed in BSE and Bombay Stock Exchange and National Stock Exchange. As of December 2023, REC had a loan book of 494 lakh crore, approximately 5 lakh crore, and net worth of 64,000 crore, right? 64,000 crore. India's green energy push. India has set an ambitious target of achieving 500 gigawatt of installed renewable energy capacity by 2030, aligning with many goals of sustainable development goals. Green bond and loans are emerging as key instrument to finance the nation's clean energy transition. Right? In 2023-24, India's issuance of green debt reached to a record 25 billion, making it the second largest green debt issuer after China. The government has also launched several initiatives like the National Hydrogen Mission and Production Linked Incentive Scheme (PLI) scheme to boost domestic manufacture of solar photovoltaic modules and advanced chemistry cell batteries. This is the first such collaboration between Indian government entity and the Italian export credit agency, that is CES, right? SAC, Italian. 4 European Union banks seek RBI nod for clearing model. Now this is what we have already seen with respect to payment clearing mechanism and settlements, etc. So 4 big European bank, Credit Agricole, this Societe Generale, Dutch Bank, and BNP Paribas are asking for Reserve Bank of India to let them use a third party clearing model to keep buying and selling Indian government bonds and derivatives, right, from share market, stock market, bond market basically, and derivatives. As a result of problem with audit and inspection rights, the European Security and Markets Authority, that is ISMA, took away the Clearing Corporation of India recognition. Right now they are not recognizing it. Impasse over this audit oversight rights. The conflict started when RBI would let the ISMA audit and check the CCIL, which is a key part of India's financial system of our government bonds and derivatives. Because of this refusal, the ISMA stopped recognizing CCIL in October 22. After 2024, European banks will not be able to do business with it. That is why they are asking for third party verification, right? To get around the impasse, the European banks involved suggested a third-party plan in which transaction could be settled through Indian banks such as the State Bank of India, ICICI Bank. This agreement would help keep forwarding this capital coming and make sure that European rules are followed. Now, what are the challenges and client confidentiality concerns are there? One of the biggest problem with using the third party approach is keeping client information personal, right? So this is related to the data protection and all. Facts about European Securities and Market Authority, that is ISMA. It was established in 2011, plays a crucial role in architecture of financial regulation within the European Union, working alongside the other European Union supervisory authority ESAs like European Banking Authority and the European Insurance and Occupational Pension Authority EIOPA, and as well as European Systematic Risk Board. Its main goal is to safeguard the stability of the European Union's financial system, ensure the integrity, transparency, efficiency, and orderly function of the securities market, and improve investors' protection. Right? ESMA develops a single rule book for European Union financial markets, ensuring consistent regulation and supervision. Right? It monitors and assesses risk to investors' market and financial stability, contributes to the development of common market standards and practices, enhancing cross-border cooperation and coordination, right? It is related to this. Now, fine, okay. So we will stop here for today. We will see more current updates, right? And just stay tuned to Victory IS platform so that we can have more details and more detailed discussion on current affairs, right? Thank you very much. Take care. Bye bye.